Cryptocurrency mining is the process by which blockchains verify transactions. This is done by miners who use dedicated machines to solve complex mathematical puzzles. They are then rewarded with new coins for their efforts. Mining can be lucrative, but it also requires a significant investment in hardware and electricity costs. Crypto mining is a complex and resource-intensive process that requires specialized hardware. It is also an energy-intensive activity, which can result in high electricity costs and reduce the profitability of a mine. To minimize these costs, miners should consider electricity rates and other factors such as hardware efficiency, cryptocurrency prices, and the regulatory environment. In addition, they should choose a reliable cryptocurrency wallet to store their profits and keep their hardware safe from theft. The most popular wallets are Ledger and Trezor. To begin mining Bitcoin, you'll need a computer that can handle the required computing power and has a high hash rate. A CPU is not suitable for this purpose as it has a limited number of cores and is not as fast as dedicated GPUs. Depending on your needs, you can opt for a GPU with a hash rate of up to 135 megahertz or more. It's also important to note that the higher the hash rate, the more likely it is that your GPU will overheat and burn out. In addition to a high-quality GPU, you'll need a power supply, motherboard, processor, memory, and hard drives. These costs can add up to several $1,000s. You'll also need a cooling system to keep your equipment cool. Once you've accounted for these expenses, you can start calculating your potential profits. While the rewards for mining Bitcoin are relatively low, it is still possible to make money from this activity if you are careful with your planning and carefully select your hardware. You can also participate in a mining pool, which will help you reduce your energy consumption and maximize your earnings. However, this is not a guarantee of profits, and it can be difficult to manage. Cryptocurrency mining is a complex process that verifies and secures transactions on blockchain networks. The miners that solve these complex cryptographic puzzles are rewarded with new tokens for their services. However, the mining process is not without its risks and can be illegal in some countries. For example, China banned Bitcoin mining in 2021. Some cryptocurrencies, including Ethereum, are switching to a different consensus model that does not require mining. Technology crypto mining is an expensive and resource-intensive process. It consumes substantial amounts of energy and produces significant heat, requiring investment in dedicated cooling equipment. In addition, the specialized hardware required for mining can be costly and difficult to obtain. For these reasons, crypto mining is not suitable for all investors. Moreover, it can be illegal in some jurisdictions. Nevertheless, it can be an excellent opportunity for entrepreneurs with the right equipment and knowledge of the industry. To start mining cryptocurrency, you need a computer with a high hash rate and good performance. You can purchase a GPU-based graphics card for this purpose, but a dedicated mining machine, known as an ASIC, is more efficient and offers higher performance at a lower price point. However, ASICs require more power to operate, which can raise your electricity bill significantly. Additionally, you need a special motherboard that supports ASICs and has the correct number of slots to accommodate your cards. Another factor that influences profitability is the cryptocurrency's market value and its current block reward. Mining rewards decrease over time, which reduces your return on investment. In order to maximize profits, you must select the right cryptocurrency for mining and monitor its market value closely. A clear goal will help you evaluate your mining operation and make operational decisions. It will also influence your approach to costs, including electricity and maintenance expenses. Moreover, your objective will impact your decision to invest your earnings into new equipment or to hold mined coins. Lastly, your goal will affect your approach to regulatory changes and environmental considerations. Mining can still be profitable in 2024, but it requires careful planning and strategic thinking. Mining profitability depends on a variety of factors such as network difficulty, hardware requirements, electricity costs, and the regulatory environment. Keeping these factors in mind, you can maximize your profits and minimize risks. Security. Crypto mining involves using computers to verify transactions on blockchains, which are digital ledgers that record Bitcoin and other cryptocurrency transactions. These verifications help ensure the integrity of blockchains and make them more secure and trustworthy. In return for their services, miners are rewarded with new coins. This is a vital function of the proof-of-work consensus mechanism. However, it isn't without security risks. Miners are a target of cybercriminals who use malware to steal users' computing power and profits. To mine Bitcoin and other cryptocurrencies, computers must run non-stop, expending a lot of central processing unit, CPU, power, and electricity. This has led to a rise in hacker attacks that target cryptocurrency mining. Typically, these attacks involve a malicious software program called a crypto mining dropper. These are often loaded onto victims' computers by drive-by downloads or phishing emails. The malware secretly digs up cryptocurrency for the attacker and leaves the victim unaware. Another risk is the volatility of the crypto market, which can impact profitability. It is important to monitor market trends and the potential for future growth to optimize operational costs and maximize returns. In addition, mining operations must consider the regulatory environment. Some countries prohibit mining, while others impose taxes and tariffs. Larger operations may also choose to diversify their mining portfolio to mitigate the risk of fluctuations in a single currency. Finally, mining operations must assess their operational costs, including hardware and energy expenses. These costs can vary significantly by location, and it is important to choose a region with cheap and reliable electricity. The mining software must be compatible with the hardware chosen, and cooling and ventilation are important to minimize energy consumption and maintain equipment longevity. It is also a good idea to invest in backup servers and a robust disaster recovery plan. These measures will help mitigate security risks and improve the chances of a profitable operation. Privacy. Crypto mining is an activity that involves verifying transactions and creating new tokens in cryptocurrency systems. It bears little resemblance to the work involved in mining for precious metals, but it is an essential function that helps to keep cryptocurrencies secure and functioning without the need for central governing bodies. It also provides a way to make money by providing computing power. In return, miners receive rewards in the form of cryptocurrency. Bitcoin and other cryptocurrencies use proof-of-work, POW, to verify transactions and create new coins. This process involves the use of computers to solve complex mathematical puzzles, which are then added to the blockchain, a public distributed ledger that records cryptocurrency transactions. This process is essential for the decentralized nature of cryptocurrencies, and it ensures that bad actors can't double spend their coins. The process of mining crypto is not easy and requires a significant upfront investment as well as a substantial amount of electricity. In fact, a single ASIC miner can consume up to 500,000 PlayStation 3 devices worth of electricity in a year. Moreover, the high initial equipment costs and ongoing electricity expenses can make it impossible to break even. Considering the volatile nature of cryptocurrencies and the difficulty in predicting future prices, it is important to invest wisely. You can minimize the risk of losing your money by researching thoroughly before making any decisions. A good place to start is by familiarizing yourself with the underlying technology. Also, make sure to invest in a cryptocurrency wallet to store any tokens or coins your mining efforts yield. It's best to use a cold wallet that encrypts your private keys for additional security. It is also a good idea to invest in a reliable internet connection. This will reduce your energy costs and improve your chances of success. Finally, be sure to take the time to regularly clean and maintain your equipment. It's crucial to monitor your miner for signs of a problem and to keep it in an area that's cool and well ventilated. Additionally, it's a good idea to periodically check the status of your miner's ports and LEDs